In this video, I'm going to step through the costs of paying superannuation late. I'm going to use the example of one of my clients whose $3,000 super late payment ended up costing him almost double that. Hi, I'm Sky, and I've been working in Big Four corporate tax for over 20 years. I'm a bit of a tax nerd and I like working with data and tax. While normally I focused on fixed assets, I recently helped a client who'd been consistently paying their super obligations between 7 and 30 days late due to cash flow problems. This happened about 2 years ago. The ATO identified this during one of their reviews. They've got a substantial amount of data with single touch payroll and they were able to match it to what was paid to the super fund. Firstly, let's talk about what late payment of superannuation is. Now, superannuation is normally due 28 days after the end of the quarter for which you pay your employees. Now, superannuation is only treated as paid on time when it actually hits the super fund to which it relates. So when an employer actually pays the super clearinghouse, this doesn't actually count. It's only when the clearinghouse has passed it on to the super fund do we actually care. So best practice to ensure that your super is not paid late is to actually pay it to your clearinghouse early. Personally, I like to do it about 7 days early. So let's talk about what you need to do if you pay your superannuation late or not in full. Now, the first step is actually to complete and then lodge an SGC form, Super Guarantee Charge Form. Now, this sets out how much superannuation you should have paid, but paid late or didn't pay in full, as well as adds a series of components. In today's video, we're going to talk about each of those components. You also need to pay the amount to the tax office. Let's talk about what the components of the super guarantee charge are. The first one is the super in respect of the normal salary that you would have otherwise paid super. In addition, you're also going to be paying super on other salaries and wages that might not have otherwise been subject to super, such as overtime. Now, that's something that's best to discuss in your specific circumstances, and we won't go through here. The next thing we'll talk about is the notional interest component. Now, this is at a flat statutory rate of 10% and isn't compounded. It's just a straight 10% rate. Now, this is calculated not from the date of the liability until when you actually paid the super. Rather, it starts from the start of the quarter for the salaries and wages and finishes at the date that you lodge your SGC statement. So let's look at a specific example for my client and let's just focus on one particular quarter. And let's use Excel because I'm a bit of a data nerd after all. So in this instance, the client had $3,000 super guarantee liability in relation to salaries and wages paid from the 1st of January until the 31st of March 24. Super guarantee should have been paid on the 28th of April, but they didn't pay it until the 1st of May. This resulted in interest being calculated from the 1st of January 24 up until the date when we lodged the SGC statement, which was in February 25. This resulted in $325 of interest, a fairly bit higher given it was only a couple of days late. In addition, we've got an admin fee of $20. Now, this is calculated per employee per quarter of $20. In addition, because they actually paid it late, that goes into what we call the late payment offset. So when we lodge the SGC statement, the total amount that was payable to the tax office was $345. They'd already paid $3,000 to the super fund. The interesting thing about the nominal interest on your SG shortfall is the fact that it's actually forwarded through to your employee. It's not something that is retained by the tax office. In addition, you might also be subject to Part 7 penalty. This is calculated as the SG shortfall plus the nominal interest plus the admin fee and doubled. While the starting position of the maximum Part 7 penalty is pretty high, you might be eligible for remission. There is a practice statement out there that talks about when it's remitted, and it has regard to things like your turnover, whether you actually paid it, how many SGC statements you've lodged, and whether you have a really good compliance history. Have a look at the practice statement. In the instance for my client, most of it was able to be remitted to result that 80% was remitted, so the total penalty was only 20%. All these payments that you're making for SGC are non-deductible. So let's have a look at the true cost of that. The $3,000 original late payment of super has given rise to almost $1,700 of penalties and interest. Some of that's gone to the tax office and some to the employee.
You're also not going to be entitled to an income tax deduction for either the original super that you paid or the interest and penalties that applied. For those with a 25% cash tax rate, this is going to be about $1,175. Being a couple of days late on this $3,000 super obligation has resulted in almost $6,000 cash impact to us. A pretty poor outcome.
So now when you put your super shortfall into the SGC form, you'll see a bunch of numbers come through. Hopefully this video has explained how those numbers come up to and the nominal interest, as well as potential penalties that could apply for late or underpayment of super. If you've paid multiple periods late, check out one of my other videos where I talk about the waterfall payment and how this could reduce the SGC liability. Otherwise, reach out in the link below if you've got any other questions.